Hello friends, hi. In this particular video, what we are going to discuss is the recent judgment or the decision of NCLT Mumbai bench in the case of Ajanta Pharma and GAPS Investment Private Limited. Though this is the scheme or the scheme of amalgamation between GIPL with Ajanta Pharma Limited, APL being the listed company, but we are discussing it from a tax perspective because this scheme was rejected or dismissed by the NCLT on account of GAAR. Income tax officer in this particular case has contended that there is a potential cash tax outflow of 421 crores if the scheme or the arrangement or the entire transaction is done in a different way. So the main purpose of this particular transaction was to obtain the tax benefit. So let us go to a specific facts of the case first. So there is an listed company which is APL, Ajanta Pharma Limited, which is held by the promoters, outside shareholders, and GIPL. GIPL holds 9.54% stake in APL. Uh, the promoters are also the shareholders in GIPL. 100% shareholding is done by the promoters and it owns 9.54%. Now, the scheme of arrangement or the scheme of amalgamation envisages that GIPL will be merged with APL. So, it will result into the direct shareholding of promoters and others in the APL. There won't be any company of GIPL if the merger takes place. So, in this scheme, it was also provided that the shares which are currently held by GIPL will be cancelled and this fresh shares will be issued to the promoters. GIPL, the only thing which GIPL does is the investment which it has in APL, and it has approximately of around 83 lakhs shares in APL. And in consideration or for purchase consideration, APL is going to issue the same amount of shares directly to the promoters. So, while the scheme of arrangement or the amalgamation is to be approved by the NCLT, uh, one needs to convey the shareholders meeting, the creditors meeting. One need to send the notice to RD, ROC, OL, as well as to the income tax authority. The income tax authority, if they have any comments to this particular scheme, they will put their comments for it. The income tax authority raised objections on the scheme when the notice was sent to the income tax authority about the particular transaction. They invoke the provisions of GAAR. So, my friends, as you could understand that if the amalgamation is taking place from GIPL to the APL, you can understand that APL is getting no actually not getting any assets or liabilities, though they are trying to articulate in the scheme that some of the liabilities, etc., obligations of GIPL will get transferred to APL. But on perusal of balance sheet, there isn't anything substance to say that any assets or anything is getting transferred to APL. It is merely a tool by which the promoters are getting the shares of APL to the extent of 9.54%. If GIPL wanted to do a particular transaction, that is, they wanted to transfer the shares to the promoters, it could have been done in other ways as well. Example, GIPL would dissolve itself and the promoters will get the cash balance or the investments which they have will be transferred to the promoters. In such a case, it would have resulted into dividend distribution tax or distribution of assets by company to the shareholders, which is the case of dividend distribution tax. The other thing could have been that GIPL would have transferred the shares to the promoters at the fair value, and the GIPL would have distributed the cash in the form of dividend, which could have also involved dividend distribution tax. So while making this sort of analogy or working out any tax benefit in this particular scheme, the income tax officer took all the approvals which are required for GAAR, and then he calculated the sum of 421 crores if as the sum which could have been fetched if the transaction was done in another way. If it is a amalgamation in real sense, then it becomes a tax neutral transfer or tax neutral transaction which has no cash tax outflow. But if it was done in two of the modes which I explained you before, it could have the tax implication or tax collection of the approximate amount of 420 crores as mentioned. So this was contended that company could have sold shares in open market and the profit would have been taxed as business income, since the main business of GIPL is to be in the business of investments. So AO computed it on the basis of business income. He could have even calculated otherwise as capital gains, but considering the maximum tax he could have charged, so he made this calculation in such a particular fashion. Then the dividend distribution tax also was calculated at 20% if the distribution is to be made. Now, now, friends, keep it noted. When the National Company Law Tribunal (NCLT) is to pass an order, it sees the comment. What did the shareholders say? What did the creditors say? What did the registrar of companies officials say? What did the regional director say in his comment? What did the official liquidator? What did the income tax authorities say? So, after seeing to all this, the NCLT says that, oh, there are actually a sum involved of 420 crores to the revenue by this scheme. So this is just a scheme of avoiding tax. Besides, there is, as I mentioned you, that if APL is receiving the shares of its own from GIPL, it is not actually receiving the in any assets out of it. It is not receiving any business out of it. There is no administrative convenience which APL is deriving out of this transaction. There is no reduction of potential cost or synergies which APL could generate for itself. It is merely a promoter who are getting a benefit out of it. It is neither the other shareholders nor the APL getting any benefit out of it. So it is not in a public interest. So on the basis of the other case laws also, the other case law which is of the NCLAT, which also says that if the scheme is not in the public interest, that is because of two accounts, because the other shareholders are not getting benefited and the revenue is losing somewhere in the tune of 420 crores. The NCLT rejected this scheme or dismissed this scheme. So now, friends, let us look it into a minute detail. If I am saying that the disallowance was due to GAAR, then what was the rationale in the scheme? Okay, so the scheme should have a rationale, and the rationale mentioned in the scheme of arrangement that the merger would result in the promoter group of the transferor company directly holding shares in the transferee company, which would lead not only to simplification of shareholding structure and reduction of shareholding tiers, but also to demonstrate the promoters group direct commitment to end the engagement with the transferee company. Again, there is, it never looks as a substance while somebody looks at it from a transaction perspective, because the company or the direct shareholders were able to exercise the same control even when there was this entity or even in the absence of entity. So there is no benefit which the company is getting by direct control if the entity is eliminated. Again, the promoter group of the transferee company was desirous of streamlining the holding in the transferee company. This is the intention of promoter group. Transferee company has no benefit out of it, and neither do the other shareholders have any benefit out of it. Friends, you might remember that there is a GAAR circular which says that when a particular transaction is to be, when we need to do a particular transaction in a particular fashion, can GAAR be invoked? So there are two questions which was particularly mentioned in the GAAR circular. A, will GAAR be invoked if arrangement is sanctioned by the NCLT or any other judicial precedents, etc.? So the answer was that where the court has explicitly and adequately considered the tax implication while sanctioning the arrangement, GAAR will not apply to such arrangement. So in this particular case, they had explicitly and adequately considered the tax implications for rejecting the scheme. So one can say that GAAR should apply for this. Considering some other cases which have even come up to the authorities and all, what does the NCLT usually do is that they never try to keep the NCLT approved scheme as the holy cow. What do they mention is that income tax authority can still possess a power of in the NCLT order. They mention that income tax authority can separately carry out the proceedings to see that whether a scheme of or is or not according to the provisions of the act. They sometimes even mention that GAAR can be still be invoked uh, in some of the cases, there is no express or adequate mentioning of this particular para. So in that case, one can still argue that GAAR will apply to such cases as there is no explicit and adequate mentioning or the comment in the NCLT order about about the income tax implication while sanctioning the scheme. The other question which was there in the GAAR circular was, will GAAR interplay the right of taxpayers to select or choose the method of implementing a transaction? Example, the transaction over here, the question is that promoter directly wants to own the shares of company rather than through a promoter intermediary company. So the two ways which are mentioned over here are, there were several options, all within the ambit of the provisions of the act, but they still decided to choose the to implement and choose a transaction which is from the perspective of amalgamation. It can very well be argued that the CBDT circular itself says that GAAR will not interplay the right of taxpayer to select or choose the method of implementing a transaction. If after considering all the situations, the company has chosen that let us go for amalgamation, then why have this point not considered by the authority? Because they have evaluated all these things. However, though I am trying to find the things in the favor of the company, I am largely of the perspective that GAAR should have been invoked for this particular case. While invoking the GAAR, what I think is a mistake done by the authority is that they have mentioned that GAAR is applicable because there is an arrangement of round tripping financing. My friends, for this to happen, let us see the provisions of the GAAR. In the GAAR provisions, they explicitly mention that Section 97, which is transaction deemed to be the Section 97 of the Act. One second, friends. Section 97 of the Act, which speaks of the transaction which is deemed to be an IAA or which is deemed to lack a commercial substance, includes the round tripping financing. So while though it includes the round tripping financing, the definition of this round tripping financing is that any arrangement in which through a series of transactions funds are transferred among the parties to the arrangement. Is there any cash being transferred to the parties in the arrangement? Is there any investments which is being transferred among the parties to the investments? While I'm speaking of investments, I'm thinking of the liquid investments being the mutual funds or some other arrangement. Is there sale and leaseback transaction? There isn't anything of such. There is merely a change in shareholding which is taking place or direct holding which is taking place. There is no case of round tripping financing getting involved. So I do think that there are various other things by which they could have simply stated that to be uh, lacking commercial substances or to be IAA, but stating it to be a round tripping finance, I don't need understand the logic. But if we speak of if we want to go to far-fetched or extrapolate this particular situation, we can say that uh, promoters group invested in company A, which invested in company B. Now, if the company A sells the shares of company B, they could be having cash, which they could have distributed, which could have involved the round tripping of financing. But this is only after company A has adequate funds. If there was such particular case, or company A had intention to sell these shares and raise funds, but there is no fund involved. That is the element I'm speaking of, and hence one could have clearly argued that transition could have been an IAA, but it is not a round tripping finance, my friends. So this is something which I wanted to specifically share in this regard. However, there is even some sort of icing over the cake which I want to share for this. There are various other schemes which has taken place in past and which are even currently going, which has the similar element of eliminating an IHC company or intermediate company, group company, for bringing in the direct shareholding or direct promoter shareholding by reducing the promoter group companies. So one of this particular scheme is even the case of the Godrej Industries. For the Godrej Industries, they have given a superb argument and a reasoning, which even seems logically fine and really flexible to do a particular transaction in this fashion. So the structure is that Vora Soaps Limited is a holding company of Godrej Industries, which in turn is a holding company of Godrej Properties and Godrej Agrovet Limited. And now you could see that Godrej Properties is in business of real estate, for which they need to have various subsidiaries for each and every project. Okay. So you know that in the provision of the Companies Act, there are some restriction which is that there cannot be more than two layers of holding companies as such. So if the Godrej properties, so it reduces the number of properties which Godrej properties could possibly have. So they wanted to eliminate this Vora Shops Limited. So what they did is that they overlapped this Vora Shops into Godrej Industries Limited. So in the rationale, they have clearly mentioned that the particular scheme is not to give a direct shareholding to the shareholder, but it is to reduce the number of layers in order to restriction on the number of layers rules which has come out by the Companies Act. They want to comply smoothly with these particular rules, and hence they are undertaking this particular transaction. Had it been that such sort of logical rationale would have been in place, it would have been a bit easier for the company to argue. So this is something which I wanted to share with you in this particular case. Should you require any query or require any clarification, feel free to contact me. Thank you, friends. Have a great day.